This is our team members. Firstly, Nur Shakira binti Yahya. Secondly, Nur Ifa binti Muhammad Zamri. Thirdly, Nurul Fatihah binti Amran. Fourthly, Nur Idina Dania Nur Azman. And lastly, Nur Alia Nadia binti Muhammad Zaizul.
The question for PROFORMA is to prepare a PROFORMA balance sheet for Suasana Gemilang Sdn Bhd for the year 2019 and determine the additional funds needed using all the information given.
Based on additional information, the company is full capacity. It means all assets will be changed, all current liability will change except for notes payable, long-term liability and equity remain unchanged, and retained earnings should calculate using formula. Then identify either current asset or current liability. We look at the question. Cash is the current asset. The amount will change. Marketable securities also current asset and the amount will change. Account receivable current asset and inventory current asset and the amount will change. For liability, account payable are current liability, accrued expense are current liability and the amount will also change. For notes payable also current liability but the amount does not change. Long-term debt is long-term liability, also the amount does not change. And the retained earning should calculate using the formula.
Then we draw the T line and put the topic on the top, which is Suasana Gemilang Sdn Bhd PROFORMA balance sheet as at 31st December 2018.
Next, on the left side, we will place all asset values and they are cash, marketable securities, account receivable, inventory and net fixed asset. While on the right side of the balance sheet, we put the value of liabilities and equity, which are account payable, accrued expenses, notes payable, long-term debt and common shares.
Next, there are some items that need to be multiplied by 1.25 using the formula changes in sales, which is the new sales minus to the old sales and then divided again by old sales, and that amount is added by 1. As a result, the amount for cash after multiplying by 1.25 is Rm 128,750 ringgit Malaysia. Marketable securities get Rm 50,000, inventory Rm 65,000, account receivable Rm 18,750, and net fixed asset is Rm 112,500. Payable Rm 40,000, and the last item that need to be multiplied by 1.25 is accrued expenses that get Rm 30,000.
Then, calculate the percent of sales increase. The formula is new sales minus old sales divide old sales times 100. 2,500,000 minus 2 million divide 2 million times 100. So the answer is 25%.
Next, let's calculate new retained earnings. The formula for new retained earnings is old retained earning plus open bracket 1 minus dividend payout ratio close bracket multiply net profit margin multiply new sales. The question already gives old retained earning is 82,000 ringgit. The dividend payout ratio is 70%. The net profit margin is 4%, and new sales are 2,500,000 ringgit. Then we insert all the information in the formula and we'll get new retained earnings 112,000 ringgit.
Additional fund needed formula is total fund for investment minus with internal financing. Total fund for investment is 375,000 while internal financing is 344,000. Minus both of it and we will get 31,000. After calculating the value of the new retained earnings and the additional fund needed, we put it in the balance sheet on the right side, which is the new retained earnings of 112,000 and the additional fund needed of 31,000.
Assets in the left column, which consists of cash, marketable securities, inventories, account receivable, and net fixed asset is Rm 375,000. While account payable, accrued expenses, notes payable, long-term debt, common shares, new retained earnings, and additional fund needed are in the right column of the balance sheet. The total amount of liabilities and equity also got the same value, which is Rm 375,000. This shows the PROFORMA in 2018 for Suasana Gemilang Sdn Bhd is balanced.
Next, we need to prepare a cash budget for Zahra and Fatima Company for the third quarter of 2018. Third quarter for 2018 is July, August, and September.
Then, write the name of the statement above, namely Zara and Fatima Company of cash budget for the third quarter of 2018, RM in bracket. After that, enter the sales value from the month of May, June, July, August, and September. For the month of May, 450,000, the month of June 470,000, the month of July 460,000, the month of August 440,000, and the month of September 480,000.
As we know, the question already told that Zahra and Fatima's company makes 20% of sales for cash. Sales in May were 450,000 ringgit, so 20% of cash sales for May is 90,000 ringgit. To get this value, we multiply 20% with the number of sales in May, which is 450,000 ringgit. Using the same way, we calculate cash sales for the following month. In June, 20% of 470,000 ringgit, the cash sales is 94,000 ringgit. In July, 20% of 460,000 ringgit, the cash sales is 92,000 ringgit. In August, 20% of 440,000 ringgit, the cash sales is 88,000 ringgit. In September, 20% of 480,000 ringgit, the cash sales is 96,000 ringgit.
Now let's move to the next calculation, which is for credit sales. 40% credit sales from sales 1 month after and 2 months after. This calculation will be clear by looking at the arrow. Credit sales 40% 1 month after from 450,000 will be received in June 180,000. Credit sales 40% 2 months after from 450,000 will be received in July 180,000. Credit sales 40% 1 month after from 470,000 will be received in July 188,000. Credit sales 40% 2 months after from 470,000 will be received in August 188,000. Credit sales 40% 1 month after from 460,000 will be received in August 184,000. Credit sales 40% 2 months after from 460,000 will be received in September 184,000. Credit sales 40% 1 month after from 440% will be received in September 176,000.
Then, will be added which other cash inflow where Zahra and Fatima company expect to be, which is 12,000 ringgit in May, 15,000 ringgit in July, and 27,000 ringgit in September. As a result, the sum of all received for the month of May is 102,000 ringgit Malaysia. For June got 438,000 ringgit Malaysia, while for July RM 475,000. August got 460,000 ringgit Malaysia, and for September the amount obtained is RM 483,000 ringgit.
For the next step, insert the purchase given from the question. Zahra and Fatima's company purchases for May are 150,000 ringgit, for June 140,000 ringgit, for July 100,000 ringgit, for August 80,000 ringgit, and for September 110,000 ringgit. Furthermore, Zahra and Fatima's company pays cash of 10% for their purchase. Purchase in May were 150,000 ringgit, so 10% of cash purchase for May is 15,000 ringgit. We get this value by multiplying 10% of cash purchase with purchase in May, which is 150,000 ringgit. We use the same way to get cash purchase for the following month. For June, 10% of 140,000 ringgit, the cash purchase is 14,000 ringgit. For July, 10% of 100,000 ringgit, the cash purchase is 10,000 ringgit. For August, 10% of 80,000 ringgit, the cash purchase is 8,000 ringgit. For September, 10% of 110,000 ringgit, the cash purchase is 11,000 ringgit.
However, for credit purchase, Zahra and Fatima's company pays 50% in 1 month while paying 40% for 2 months after purchase. This calculation will be more clear by looking at the arrow to avoid doing mistakes. For May, credit purchase of 50% 1 month after purchase from 150,000 ringgit will be paid in June is 75,000 ringgit, while 40% 2 months after purchase from 150,000 ringgit will be paid in July is 60,000 ringgit. For June, credit purchase of 50% 1 month after purchase from 140,000 ringgit will be paid on July is 70,000 ringgit, while 40% 2 months after purchase from 140,000 ringgit will be paid on August is 56,000 ringgit. For July, credit purchase of 50% 1 month after purchase from 100,000 ringgit will be paid in August is 50,000 ringgit, while 40% 2 months after purchase from 100,000 ringgit will be paid in September is 40,000 ringgit.
For August, credit purchase of 50% 1 month after purchase from 80,000 ringgit will be paid in September is 40,000 ringgit.
Next, we need to add all purchases that Zara and Fatima company made, which is salaries 50,000 per month for July, August and September. Next, rental expenses, which is 20,000 for July, August and September. Dividend 20,000 for June and September. Taxes 80,000 for August. Fixed asset purchases 25,000 for August. Principal payment 30,000 for July and interest payment 10,000 for July. After that, we need to sum up the total purchase made on every month. On July, we got 250,000, for August 289,000, and for September 181,000.
After that, calculate net cash flow A minus B, total receipt minus total purchase for the month of July, August and September. For July, 475,000 minus 250,000 is equal to 225,000. For August, 460,000 minus 289,000 equal to 171,000. For September, 483,000 minus 181,000 is equal to 302,000.
As stated in the question, the firm has a cash balance of 62,000 ringgit at the beginning of July. So we sum up the net cash flow in July with the beginning balance 225,000 plus 62,000. We got 287,000 as the ending balance for July. 287,000 we took to the side as the beginning balance for August. Net cash flow in August, which is 171,000 plus 287,000, and the answer is 458,000. In the same way, we bring this 458,000 as the beginning balance for the September. Net cash flow for September is 3,200 plus 458,000, and we find 760,000 ending balance for the month of September.
Then, how to find out cash budget for Zara and Fatima company is a plus or deficit is from ending balance minus which minimum requirement, which is for July RM 287,000 minus RM 20,000 ringgit, got 267,000. For month of August was RM 458,000 minus which 20,000 ringgit Malaysia got RM 438,000. And September 760,000 ringgit Malaysia minus which RM 20,000 and the total got 740,000 ringgit Malaysia. From this total amount for the third quarter, it can be concluded that it is a plus because the final balance obtained is positive.